All right, so thank you so much for that. Let's take a look at earnings now. And quarterly profit at India's ICICI fell by the most in 2 years. Provisions for bad loans more than doubling there. Let's bring in Bloomberg Intelligence Asia Pacific banking analyst Diksha Gera for more in Singapore. Diksha, ICICI's profit fell almost 50% to $152 million this quarter. I mean, what do you make of these numbers?
Yeah, hi Heidi, good morning. Well, yes, the numbers were down and they were even 50% below consensus estimates for the fourth quarter, which kind of confirms my view that there is downside risk to the estimates for consensus going forward. For fiscal 2019, consensus is looking at a 43% jump in profits, which I think is definitely a very high ask, and there is risk to that. But just on the numbers reported by ICICI, the gross NPA ratio went up, which was quite expected actually, but the interesting part was that the total stressed loans went down. And secondly, on the retail side, the business momentum looked quite interesting to me.
So a 50% drop in the quarter, further downside on consensus estimates. What are we seeing here? And, is this the worst of it, or are we seeing more pain when it comes to asset quality deterioration?
Yeah, so actually the gross NPA ratio going up was quite expected. But that's just the optics, right? So the main number to look at is the total stressed loans ratio, which actually went down in the last quarter. So that's quite encouraging. What I want to see more is a little bit more stability in that number, because there was another account for the gems and jewelry sector fraud that came up, which kind of, I think it'll take a little while for us to build that confidence that the trend is still on a downward trajectory. But other than that, I think with the RBI new rules, there will be still some near-term stress that the bank will have to go through the motions and recognize through increased provisions going at least in the next few quarters.
Yeah, I think it's kind of how you feel the morning after a fairly big night, hangover there, if you will. But at some point, though, it does get good, Diksha, and there is a positive spin to this. When you look at the retail business, how is momentum doing there, and do we actually expect a meaningful recovery in loan growth here?
Yes, actually, those are the green shoots that I was rather pleased about. So I think the targets set by the board and the management are quite interesting. They're looking at a 20% retail loan growth in the coming fiscal, driving bulk of the total lending by the bank. They also targeted about 60% of their total loan book to be out of the consumer side of things, which again gives me a little bit more confidence in terms of how the asset quality scenario could look like going forward. I mean, the more important part was the CASA focus. Deposit is one of the key challenges that the Indian banks will be facing near term as loan growth revives, and ICICI wants to hold on to that and defend its position. All that is very good. What I just want to see a little bit more is how this whole flux around management issues and continuity, how will they be able to maintain and achieve those targets for fiscal 19 and 20.
Yep, well, we'll wait and see. Diksha, thank you so much. Diksha Gera there, Bloomberg Intelligence Asia Pacific banking analyst, live for us out of